Hello everyone, and welcome to TBR's webinar and the race from the bottom, which IT services vendors will reach the top in 2015. I'm Justin Sargent, and I'm hosting today's session. IT services revenue growth bottomed out in 4Q14 and will accelerate in 1Q15, but TBR expects growth will remain in the low single digits in 2015. Vendors use organic investments, partnerships, acquisitions, and improved delivery to differentiate. However, commoditization of traditional IT services, businesses' cloud adoption, and pricing pressures continue to hinder revenue growth. Clients seeking to reduce costs, boost flexibility, and improve business outcomes by modernizing IT systems are increasing demand for social, mobile, analytics, cloud, and security solutions, which will dictate IT service providers' expansion activities in 2015. Today's webinar will provide insights from TBR's most recent IT services benchmark report. And if you have any interest in learning more about this report, please reach out to myself or one of the analysts after this presentation. Now, before we begin the presentation, there are a few housekeeping items I would like to cover. First, we'll be recording today's session and posting on our YouTube site and TBR channel. We encourage you to visit our channel to view this presentation or any of the others we've posted. Second, we'd like to hear your thoughts and opinions on today's material. Please send any questions to the Q&A function, and we will address them at the end of the webinar. Finally, we'll send out the slides and a link to today's recording within 24 hours of the conclusion of the webinar. You can also find the slides as well as our thought leadership pieces, other webinars, and our analyst commentaries on SlideShare at slideshare.net/TBR_market_insight. Now let me introduce the analysts presenting today. Ramunas Svarcas is the principal analyst in TBR's professional service practice and focuses on the analysis of professional services companies, their strategies, processes, profitability, and operational dynamics in the ever-changing services industry. Heffernan is practice manager and principal analyst in TBR's professional services practice, where he directs the practice's syndicated portfolio and cultivates and manages projects on topics ranging from management consulting to firms' financial advisory services to emerging technologies. Elitsa Bakalova is a senior analyst in TBR's professional services practice, where she provides overall trend and market analysis, strategic assessments, evaluations of corporate performance, revenue, cost, and profitability modeling. Elitsa is the lead on IT services vendor benchmark. Amy McLaughlin, professional services research analyst, covers India-centric vendors and multinational vendors across IT service segments, geographies, and industries, and emerging technology trends, such as cloud, mobility, big data, and analytics. Amy is closely involved in the development of the IT services benchmark. And with that, let me hand this over to the analyst.
Thank you very much, Justin, and thanks everybody for joining. So if this is the first time that you've listened to one of our webinars on this benchmark, it is a quarterly benchmark. We cover 30 different companies, and it's built on a deep understanding that we have by doing company reports every quarter on these same companies, and actually a few more. We look at individual company performance, and then we compare that and contrast it across a few different breakdowns within this benchmark, including 4 different service lines, 3 different geographic splits, and then a ton of metrics around both financial and operational performance. So what we're going to cover today really is just a highlight of all the different parts that are in this benchmark. It's very deep, it's very comprehensive. When we get to the end, we'll throw up a slide that shows a little bit more of the full range of everything that's in this benchmark. But what we're going to do today is we're going to hit 3 main points. We're going to set the baseline for what the performance has been among these 30 vendors across the last quarter. We're going to dive deeper into some of the common themes that we saw within the quarter. And then we're going to get specific on a couple of vendors. And the reason that we picked a couple of vendors to dive deeper on is to reinforce the idea that, well, not the idea, the reality that this research is really truly vendor focused and looking at the performance through a business model lens, not just through a sort of Wall Street financial lens. So with that, I'm going to go ahead and hand it over to Ramunas to take us through the first part of this.
Thank you, Patrick. So the first section here, we're going to really look at what's happening in the IT services market and some of our ideas in regards to what we believe is actually happening with regards to the vendors that are serving the IT services market. As the first bullet here highlights, strategic makeovers are occurring. I mean, we've been listening over the last several quarters of everybody announcing restructuring, realignment, reconfiguration, hiring new people, getting rid of old people. All the IT services vendors are trying to change themselves to better address client needs. And the reason for this is that customers really continue to want more for less. And the focus here is on value. What kind of value can I provide my client? How do I deliver this value? Well, you really have to understand and align with your customer needs, and then serve and identify and then fix or help them fix their business challenges. What's interesting is that this alignment takes time. Uncertainty prevails throughout the marketplace. As we see here from this slide, IT services revenues for the benchmark firms we cover really has flattened out from a growth standpoint. Yes, the numbers are creeping up slowly, but again, a 1.5% growth rate is not spectacular when in the past we've seen growth rates in excess of double digits. So it's a market that has become very sluggish. The uncertainty prevails because of, there's a whole lot of economic uncertainty in various geographies. We're hearing growth rates going up, growth rates coming down, economies being very sluggish. It gets down to the country level, even the state level. Very, very small regions are having challenges. Other regions are growing quickly. There's a lot of uncertainty. Are we serving the right clients in the right region? And then the uncertainty also prevails around cloud. What cloud and what cloud solutions fix everything for us? We don't know. We're not sure. Security constantly is a question regarding cloud. It's one that hasn't been answered 100% yet. So everybody's really kind of in a mode of let's wait and see, let's go slow. We've heard a lot of announcements about IT spending going down, declining. And again, this is prevalent with the very thought that, I want more for less. So I'm not going to spend as much, but I want you to deliver just as much. So how are the vendors changing to fix this problem? What changes are they making? We've really identified two key areas here. One is that vendors recognize that business challenges are a key element in terms of making changes in their IT infrastructure, and they try to identify and help the clients they have to provide IT services to do so. Consulting and systems integration, and consulting very much in this line, is a critical aspect. And businesses are different between industry verticals in terms of who they address, how they function. So knowing your customer and being able to do the proper job in terms of advising them is a critical aspect and part of the changes occurring for many firms. As a consequence, they're trying to focus on their professional services staffs, make sure they can consult and relate to their customers specifically in the industry vertical that the customer works in. And this whole process takes time. We'll get a little more detail a little bit later on here on IBM, which is noted here. There's certainly one that's going under a pretty massive restructuring. On the other side of the equation, those companies that are restructuring and reconfiguring themselves are really showing much less revenue growth than the guys that actually have already rolled out platforms. And this is the second change that we see is happening. Platforms, solutions geared to specific industry verticals are really the key element that many firms are focusing on, starting to deliver. Some have developed these platforms already now are in place for several years, and they're right now seeing the traction because it's a quick way of, one, obtaining a customer, and two, generating revenues from that, especially as you scale up. Accenture is a prime example here in this case. They're working very strongly in the Workday arena in terms of creating complements to the whole arena there and driving out sales. And, just this past week, we heard an announcement from Accenture strengthening their relationship with Deloitte. What's happening here? Accenture has an excellent product in terms of their Accenture Duck Creek, that is for the insurance company and insurance companies and helps them really prepare for the future. And it's a software solution. And how do you get that software solution out in the market? Well, you certainly can leverage your Accenture organization, but if you add Deloitte and their organization to the whole picture, selling that same software solution for everyone, you're building the scale, and that's going to create revenues for you. And in this case, in the cloud space, it's a very positive effect for Accenture. HCL is another example. There's a number of platforms. We'll cover a couple of the others also later. But they, too, are generating their solutions in platform form. They have an Enterprise as a Future platform, which is identified and works on the infrastructure management side of the equation. Everyone's heard of Alt ASM, which is for All Applications Maintenance. And they've developed MyCloud, an orchestration platform. And that platform actually, from a development standpoint, leveraged HCL's internal IP, but also then brought in also an integrated software package from NIMSoft Monitor, which really improves the overall MyCloud platform and makes it applicable for very many firms. So with that in mind, I'm going to let Elitsa take over and explain you how we see it all working.
Thank you, Ramunas. I hope everyone can hear me well, and if you don't, just let us know. I'm starting with slide 8, and it's a deeper dive of what Ramunas started covering around the portfolio trends. So vendors really look at their go-to-market and service delivery strategies to make sure that clients are able to improve their business performance through innovative technologies. When you look at portfolio strategies, that's one of the areas that vendors try to adjust to demand trends. We see many of the IT service providers offering solutions related to social, mobile, analytics, cloud, security, to support clients' adoption of such technologies. Vendors also increase value by offering technology-enabled integrated services and solutions to support clients' transformation with a value proposition beyond just lift and shift outsourcing. And IBM is the perfect example of this type of a company, adding over the past several years technology-enabled solutions in cloud and analytics, in security as well, and moving away from commoditized services such as customer care BPO, which the company recently divested. On the sales and partner strategy, we certainly see a lot of IT service providers developing offerings with partners, helping them expand their portfolio and geographic reach. One other area that I'd like to emphasize is the cross-selling of solutions across the portfolio stack. We see this as increasingly becoming an area of emphasis for the vendors as they seek to ramp up revenue growth by selling more of their services to clients. Accenture is a perfect example of a company that builds client relationships, has a very well-developed model for that, and for cross-selling capabilities. So, for example, wrapping Accenture strategy services with Accenture digital solutions. Atos is another vendor that a few quarters ago established a strategy, completely transformed its sales model to be more focused on clients. So deepen the relationship with the client and sell across the Atos portfolio, because it realized that for its large clients, which comprise about 250 key accounts, Atos, for many of those clients, Atos is offering just one service line. So certainly there's a lot of opportunity for revenue expansion with existing client base by selling more of Atos, more than one service line. On the delivery side, a key trend that has been going on for several quarters is that vendors realize that they need to be close to their clients. They need to have people in the geography to build relationships and trust, to quickly respond to client needs, to offer consulting-driven propositions, and to work with clients in highly regulated industries such as the public sector. And I'd like to call out the India-centric vendors as an example. Infosys and Cognizant expanding in the U.S., building headcount there to help them pursue transformational engagements by being closer to the clients. Now, I'd like to go over the performance by service line on slide 9. And focus first on BPO, which is the fastest growing service line in 4Q14, and revenue growth accelerated compared to what the service line experienced in 3Q14. Ramunas talked a few slides ago about cost-effective platform solutions. And BPO is a good example of the positive effect platform solutions and automation has on revenue growth and also on profitability. Such productized solutions are scalable, they're rapidly deployable, and enable vendors to deliver services faster with a smaller human component and general viable nonlinear growth. Now, adding industry specialization and analytics to the mix increases the value proposition for the BPO offerings, helps the vendors drive business outcomes beyond lift and shift outsourcing, and supports BPO growth. Consulting and SI, on the other side, was the largest TTM, was the largest service line in terms of TTM revenue. And it was one that hasn't fluctuated as much in terms of growth when compared to the rest of the service lines over the past 9 quarters. But growth remains in the range of 1 to 3%, so in the low single digits for the past 9 quarters. Consulting and SI growth is driven by vendors' emphasis to help clients create advantages across their business by using new technologies. And vendors in the benchmark often use a consulting-led approach to help clients adopt cost-effective solutions and SMAC technologies. Vendors also expand their onshore resources to be close to clients, as we called out the Indian vendors. They also pair industry-specialized solutions and strategy consulting to help clients overcome macroeconomic and regulatory challenges. And while vendors provide business value propositions for clients and, transform their portfolios to be more relevant, their activities are still not sufficient to boost consulting and SI revenue growth in 4Q14. Moving to the next slide, 10, we show the geographic performance in the benchmark, covered in 3 geographies, Americas, EMEA, and Asia Pacific. TTM revenue growth in the Americas is decelerating, but it still remained positive in 4Q14. Vendors in the region capitalize on demand for as-a-service offerings and outcome-focused business transformation. And while vendors in our benchmark benefit from rising demand for cloud solutions in the U.S., cloud is negatively impacting revenue growth due to smaller deal sizes of such transaction and the need for more volume and a higher number of transactions to compensate for the revenue. So to overcome the pressures generated by the cloud models, vendors are bringing in capabilities, for example, in systems integration, big data and analytics, and cybersecurity to their cloud customers. Thus broadening the work that they're doing with clients to compensate and expand the revenue opportunities. Another factor is the tight public sector spending, which challenges growth in the U.S. and is pushing many of the vendors to look for opportunities to expand and work with the commercial sector. We expect to see a change in the market dynamics in North America as we see India-centric and European vendors making acquisition to expand their client reach and proximity. For example, Atos acquired Xerox ITO last quarter and will emerge as a core competitor in the ITO segment. And we just heard Capgemini today announce the acquisition of US-based iGate to ramp up its expansion in North America as well. So vendors coming in and shifting, transforming, consolidating the market in North America. Now I'll hand it over to Amy, and she will show the vendor positioning on the next slide.
Thank you, Elitsa. When it comes to the IT services market, what we're seeing is vendors across the board, they're shifting their business models to adapt. And with digital taking center stage, we're seeing companies who are quickest to change their go-to-market strategies are gaining an edge over the others. Just this month, we heard announcements from Cognizant, Wipro, Infosys, and others that are revamping their business units to create more streamlined processes. They're trying to win more business, deliver services better, and engage their R&D arms to keep innovating in the digital technologies. This includes social, mobile, analytics, cloud, and increasingly we're hearing the Internet of Things and machine-to-machine computing also being mentioned in the digital space, which makes perfect sense. When looking at this graph, we see that IBM, Accenture, Fujitsu, and HP, they all bring in the most services revenue, while companies like Capita, TCS, and Cognizant have the fastest growth rates. So looking at what some of those companies are doing in comparison to their peers, particularly IBM and Fujitsu, who claim larger revenue shares but are experiencing lagging growth rates, I'd like to just kind of talk to you about that and some of the reasons why. For IBM, in January 2014, which is over a year ago, IBM divested its BPO unit so that it could focus on more profitable technology-enabled solutions like cloud, digital, and analytics. They changed their go-to-market strategy to bring a few partners from its global business services and global technology services into its IBM Analytics and IBM Cloud, so that they could then drive consulting and systems integration business more readily because it's higher value and higher margin for them. That was over a year ago, and it was the beginning of a shifting of their entire organization to being services-led. It included the creation of the business analytics and strategy practice and the IBM Watson unit. So I'd say IBM has definitely been a leader in taking sharp measures to adapt their business. In July of 2014, they also realigned their global process services, GTS and GBS. And by combining those, they combined their business strategy and their transformation units, which helped them to align the consulting and delivery to accelerate client outcomes. And you'll see that a lot of the companies are following IBM's footsteps. Going back a little bit to what Ramunas and Elitsa were saying a little while ago, IBM wants to be building the infrastructure and setting the bar for the others, not delivering commoditized services. They're in a transition to have IBM Global Services drive their sales of their high-value technology offerings moving forward from here on out. We expect this transition to drive margin expansion through 2016, but not revenue growth, because the huge internal transition will take some time to pay off when it comes to the bottom line. We do expect revenue recovery from IBM in 2016 as those investments pay off. We think that IBM's biggest strengths are its well-developed brand and reputation, because that provides access to the C-suite and its ability to create and capture opportunities in client spending. Also, the fact that IBM's consultants partner with IBM Research and IBM software to deliver consulting services is another strength. We see opportunities for them to expand their business analytics and Smarter Planet offerings to clients by shifting to a software as a service architecture built on their soft layer infrastructure backbone. That said, IBM's premium pricing puts them at a disadvantage to competitors such as the Indians, who are better known for lower cost services. We're also seeing fast followers like Cognizant, also an Indian company, accelerate investments in high demand SMAC technologies, and their portfolios are catching up to IBM's. The big point on IBM that I'm trying to make here is that they're the biggest bubble on the chart, which means that they're capturing the largest share of IT services revenue. But being on the left-hand side means they're growing way slower than the industry average. The reason for that is that it takes time for organizational changes to positively impact that bottom line. Taking it one step further, for companies that are just beginning to make changes now, it could be very easy for them to be left behind altogether. Looking at Fujitsu, for instance, which is another large bubble on the left, they're working very hard to grow outside of Japan by adding to their cloud and data center services. They recently pledged $2 billion as an investment into cloud over the next 2 years so they can build their portfolio and their global delivery capabilities. The fact is they're late. They also struggle with backlog, employee utilization, and high debt ratio. So TBR believes for them the stories are very different and that their profitability will remain stagnant over the near term. We think investments such as hiring in Scotland, lack of low-cost resources, and a lack of early investments will definitely offset any advancements that they may have made in process automation.
And with that, let's move to the second part of this, where we go more into the quarterly focus. Again, the benchmark itself takes 30 vendors and compares them across the different metrics, and particularly by service line and geo, as was just explained. But now what we'd like to do is, within each of the benchmarks, again, the quarterly benchmarks, we dive a little bit deeper into particular themes or things that come across in our research. And so we're going to turn it now again to Ramunas to get to the first of these.
So as I had already started out earlier, platforms certainly is a key element of what vendors are focusing on, what clients actually want. And, you know, it's an area where we definitely see platform wars evolving. On top of that, we're going to also see that there are certain industry areas where we're seeing a lot of traction and a lot of focus. You know, we've seen a lot of the vendors, you know, focusing on the healthcare market. Here in the United States especially, it's been a critical area with all the changes in healthcare and the way healthcare is being paid for and or now trying to drive costs out of the healthcare system. And on the other side of the equation, everybody's talking about digital. Digital marketing, digital ads, mobility and digital, everything under the sun is becoming digital. And those are kind of the three prevalent themes in the marketplace. Either you develop the platforms or you focus specifically on a given niche and work in that area. So from a platform standpoint, one of the biggest themes is cloud platforms. Capgemini NetSuite formed Virtual Company to really focus and provide a BPO platform. What's even more interesting is the announcement this weekend of the iGate acquisition. What does iGate bring to Capgemini? A bunch of vertical-centric platforms, especially in the BPO space, that have been developed and successfully implemented in the United States, which now Capgemini can also bring to the European theater. So it's a win-win for Capgemini in that they don't have to develop all these platforms themselves. They basically acquired them, and now they can go to the market with them on a global scale. Unisys, they've released their cloud-based edge service, which is focused on management of IT services and the IT service infrastructure. Again, it's a managed service platform. Again, it's a sort of a niche play here from the standpoint of you're not managing everything under the sun, but you are managing the overall IT services functions. You're not executing the BPO here in this platform, but you're again targeting and trying to specifically address certain needs that a client may have. And finally, HCL. I mentioned already a couple of the HCL platforms earlier. They have a lot more. As you can see here at the bottom of the list, you've got a CMO, an SCO, and an Engage platform for the utilities. Not only is it a specific platform, but it's actually targeting the utilities industry. Again, niching yourself into a specific area to succeed in the marketplace. So to get on to the other two key areas of that we're looking at, I'm going to turn this over to Patrick to talk about healthcare and digital marketing.
And digital, right. So healthcare is it's the vertical that won't die. Doesn't seem to plateau. It just keeps on giving to the IT services sector. We have a separate TBR benchmark on healthcare IT services, and that has only 20 vendors, and there's some overlap, but there are a few unique vendors in that benchmark as well. And the average growth across those 20 vendors in the fourth quarter of last year was 5.4%, which we can see is considerably higher than what Ramunas was talking about at the beginning and Elitsa mentioned in terms of IT services overall. You can see on the slide here that the cloud and electronic health records are combined with regulatory pressure is really what's creating that constant demand. And I have to say, in preparing for this, hearing Ramunas say cloud over and over and over again, it's amazing the impact that it's having on IT services as a whole. And I think within the healthcare sector, we're going to continue to see that the cloud is going to be just an underlying cause of disruption and a huge opportunity for the IT services vendors. One other key part that I want to bring up is analytics. We've seen that providers in the healthcare space have sort of lived for a long time with what I would call an over-reliance on historical data, and that's starting to push up against the capabilities, the opportunities that predictive analytics brings to the table. IBM is clearly huge in this space. Accenture and Xerox have both been investing in the R&D necessary to build up their predictive analytics capabilities specific to healthcare. And then I think others are primarily using partnering as a way to do it. I think when we follow this particular trend, and again, we have another benchmark that looks specifically at business intelligence and analytics. When we look at this in the healthcare sector, we're going to see that analytics is, if cloud and electronic health records are the drivers and the catalyst really is regulation, then it's going to be analytics that beyond anything provides that extra value, that extra revenue generation for the IT services vendors. So that's healthcare. Digital, and no one will be surprised when I say this because it's the fourth time I've said it now, we have a separate benchmark that covers digital marketing services. And we've seen accelerated investment here. It's impossible as a researcher, as an analyst, to have a conversation with an IT services vendor and not end up talking about digital and digital transformation. In the last couple of months, I've met with Capgemini, I've met with Atos, I've met with IBM, I've met with Accenture, I've met with HCL, and every single conversation comes around to digital transformation and what they're doing. Elitsa is going to talk about Accenture in a couple of minutes, so I want to consider instead IBM for a moment. Like Amy said, IBM is one of those companies that if you're in the IT services segment, you can't help talking about. Within our separate benchmark on digital marketing services, IBM is actually only the third largest, and they may be being held back a bit by probably one of what we think of as IBM's biggest strengths, and that's a technology-first approach. They bring a lot of predefined solutions. There's an emphasis on prepackaged rather than custom, and that is probably going to cement that sort of technology-first, strategy-second approach. But the bottom line when it comes to digital, both in digital marketing services specifically, but then in digital overall within the IT services sector, is that there are very few vendors that can compete on an end-to-end basis the same way that IBM does. So as we go forward looking at digital transformation, I think what we're going to see is a lot of opportunity for vendors who are able to partner well, who are able to find that technology partner, a lot of opportunity for vendors who are able to bring strategy consulting, bring management consulting to the front end of the table, but you're going to continue to see IBM and her immediate peers taking a large share of this market going forward. So with that, I'll turn it over to Elitsa, and we're going to go into the last part of this where we focus in on just a couple of vendors. Elitsa?
Thank you, Patrick. Last section, active vendors. In this section, we will cover Accenture and Cognizant, two IT services vendors that outpace their competitors in their respective peer groups in terms of growth and are building scale to capture future opportunities. So let's start with Accenture, which we have on slide 17. Accenture's vision to innovate is paying off, and the aggressive execution of its strategies is helping the company increase revenue growth and grow above the overall IT services average in 4Q14. Of the 30 vendors that we have in the IT services benchmark, Accenture ranked number 10 in terms of revenue growth at 6.4% year-to-year in 4Q14, and was the second largest in terms of TTM revenue size, right after IBM, which is the leading in terms of size. Core strengths to call out for Accenture are its improving sales performance over the past 3 quarters, which is due to its amplified focus on bookings conversion and capitalizing on increasing demand for transformational services. Digital is also another key aspect for Accenture. It's integrated across all of Accenture's operating groups, and for Accenture, operating groups are its industry segments. This integration allows the company to address client needs with an industry view based on their specific needs created by the industry that they operate in, a core need for clients to have someone who is able to address their specific requirements. On the initiative side, Accenture's value proposition around business outcomes delivered through Accenture strategy helps the company gain access to budget keepers and to demonstrate its capabilities. Accenture is also expanding the supply side by hiring people at a double-digit rate, something that happened in 4Q14 and also in 1Q15, as Accenture already released 1Q15. So it helps the company address demand. It shows that the company is ready for further growth, and to be able to provide services and solutions in analytics and digital, security, and the Internet of Things. On the opportunity side, Accenture, we believe Accenture has an opportunity to continue with its growth. Pairing investments with digital and cloud delivery and strategy consulting helps the company develop relevant and price competitive offerings and attract both IT and service line buyers at its clients. We expect Accenture will meet its revenue guidance for 2015, which it recently updated to the range of 8 to 10% year-to-year for 2015. The company capitalizes on its organizational structure that was implemented about a year ago with the launch of 4 growth platforms, including Accenture Strategy, Digital, Technology, and Operations. And we believe next generation solutions that are integrated with consulting will help Accenture capture deals and drive business outcomes for clients. And now Amy will show us the example of Cognizant.
Hi there. So for Cognizant, they use thought leadership and business consulting to demonstrate to clients that they understand and can deliver desired business outcomes through their transformational technology solutions. Cognizant really wants the market to see them on the same playing field as companies like IBM and Accenture. That said, IBM and other solutions-led competitors such as Accenture and Deloitte offer similar portfolios as Cognizant, which includes a lot of integrated solutions along ITO, BPO, and AO services lines. But their portfolios are broader. They have less gaps than Cognizant's technology capabilities, and they tend to have greater access to C-level decision makers, which enables them to get to obtain larger multi-year transformational deals. As a result, we believe Cognizant will be more successful with cross-selling their managed services and some industry-oriented BPO platforms like their One HCM, which is healthcare related, to existing clients that already put their trust into their business process transformation capabilities. Cognizant's aggressive acquisition activity in the second half of 2014, we believe will provide an inorganic reprieve from revenue growth deceleration through 2015, while advancing their long-term transition from a low-cost outsourcing provider to an outcomes-focused, solutions-led vendor. Without another large acquisition in the digital consulting space, we do believe that prolonged deal closing cycles and large-scale digital transformation engagements will challenge Cognizant's ability to sustain their industry-leading revenue growth beyond 2015.
So, just a quick question. I'm going to ask the question this time. So you're saying that they need to make a digital acquisition to grow in the space, or they're going to get left behind? Just to clarify that.
Yeah, I would say that what was happening before they acquired TriZetto was that their margins and their growth was still pretty good, but it was starting to decelerate. But as soon as they acquired TriZetto, they instantly had better and higher revenue growth and opportunities in the healthcare space. So doing it inorganically for them, I think, is probably their best bet than to try and just trudge along and do it organically.
Right, because they're not IBM. They're not going to be able to develop that IP. That makes sense.
Yeah.
Okay.
I think the same thing is happening with Capgemini, too.
And that's why.
The iGate acquisition is going to be accretive to their revenue stream and their profits as well, because they're basically getting a very nice little slice of the pie
right.
at a very profitable level of business. So it's going to be the same situation there.
Okay. Excellent. Why don't we move on then? The next slide, I think, is just a chance for me to say that what we've covered here are the three main highlights of this webinar: the actual financial performance and the operational performance of the vendors, some of the quarterly focus, what we look on each quarter within the benchmark, and then a couple of the vendors. I think you probably get a sense from hearing Amy and Elitsa talk about Accenture and Cognizant that the benchmark itself and our individual reports on those vendors are about as deep as you can possibly go on these guys. So one thing I do want to point out is that we're researchers, we're analysts, we're thinking about these companies all the time. We're constantly doing our analysis on what they're doing. But to that end, we do look at, although we are vendor specific, we do look at some overarching themes, and we do plan ahead to look at trends that are happening within the industry, within the IT services industry, and then map those trends against what the vendors are actually doing themselves. So you can see on this slide there are sort of three main themes for us this particular quarter. Security services, Ramunas mentioned at the beginning how the adoption of cloud in many ways is impacted by the ability of cloud to provide a security that's as comforting as the security you have without cloud, although that's certainly a level of comfort, not a guarantee. Digital transformation, I talked for a while about digital and what that means. We're focused in many ways on digital marketing services as one research stream, but digital transformation as a whole obviously is something that all of these IT services vendors are going through. And then Internet of Things, call it Internet of Stuff as one of our guys calls it, the convergence of information technology and operational technology, lots of different buzzwords and catchphrases for this, but it has become something, and IBM's announcement recently around Internet of Things is something that obviously is captivated a lot of attention, and it will be something that we look at across all of these vendors as we go into the next quarter. Now, as you look at these, if there are certain areas where you think you have very specific questions, or if there are certain areas where you think your firm, your company is doing really well, please certainly reach out to us. We're researchers, we're analysts, we ask questions all the time. Understanding and framing those questions with respect to what's really happening in the marketplace is enormously important for us. So with that, I'm going to go ahead and switch to the questions that we've got already queued up. Please put in other questions now in the chat function. Let us know what else you want to talk about. And rather than look at a slide that just says questions on it, I'm going to leave up a slide that actually shows the full range of our syndicated coverage as it stands right now. So you can see that beyond this benchmark, we also cover a lot of other things. So Justin, are there some questions in the queue?
Yep.
All right. I'll go ahead and read the first one here. Will BPO overtake the other service lines in terms of revenue size? Ramunas, I'll let you take that.
Well, as we showed on that on the earlier slide, certainly BPO revenues are almost at the same level as applications outsourcing revenues. However, if you look at and compare the growth rates, BPO is running at almost double the growth rate of applications outsourcing. I believe that, if as an analyst, I tend to play with numbers. If you multiply the current growth rates out, and for all intents and purposes, BPO will surpass applications outsourcing as a revenue leader in about 2 to 3 years. That presumes that the growth rates stay the same. If applications outsourcing further declines and BPO continues to accelerate, it might be even quicker than that. It's definitely an opportunity area, and the reason it's an opportunity area is because of cloud to a certain extent and the ability to add on analytics to the whole BPO process and provide BPO as a service with an analytics flavor and so forth. Everybody's recognizing that, the basic back office functions, and now it's starting to pervade into the front office side of the equation, can be outsourced, especially if they're not too difficult, not too complicated. And as a consequence, firms are doing it. Why bother and spend revenues on just running these base, office operations when you can have somebody do it for you at a much cheaper rate? And I think the real key here is the European theater, where outsourcing, especially business process outsourcing, now is acceptable to do so. They've become, many of the European firms have recognized that they're, participating on a global scale. Their costs have to be equivalent to anybody else's cost anywhere else in the globe. And as a consequence, they need to be able to outsource some of these operations. Of course, the process itself is slow because there are a lot of labor regulations and other things that are impeding that. But they are making headways, and I think it's going to continue that in that route. On the applications outsourcing side, which is the one that looks like it might be in jeopardy as being, and becoming the smallest bucket, there's definitely a trend towards just good enough using software as a service workloads to do operations rather than having them custom developed and built out for a client. Again, it's a cost savings from that standpoint. At the very tail end, on the mobile side of the equation, yes, people are probably going to come out and continue to customize. So, the applications outsourcing, applications development is not going to go away ever. There's always going to be a need to recode, reprogram, redo some of the work. But as a growth area, I think it's going to continue to stay in the low single digits over the near term here, unless somebody comes out with some great ideas of, how to really reprogram everything under the globe. And I don't think that's going to happen.
No, not going to happen. And I'd be remiss if I didn't mention that as you see on the slide on the far right side under the benchmarks, there is a global delivery benchmark that we produce semi-annually. It is limited. I think it's only 14 companies. It's not quite as many as this. And it's very much centered on headcount and on global delivery centers and understanding how those are evolving and changing. And the most recent edition of it actually had a very deep dive on BPO and automation and what's happening there. There will undoubtedly be a webinar on that sometime probably next month, so keep your eyes open for that. Ramunas, you talked a little bit about Europe, but we have a question that says, can you provide more details on trends in Europe, such as growth, drivers, and demand? And I think let's hear from Elitsa first on that.
Thank you, Patrick. Europe it's a growing geography. We show the graph in our deck. It outpaced growth in the Americas and in Asia Pacific, and I think there are several factors that help the vendors grow in this geography. Ramunas started talking about BPO and outsourcing in Europe, and I just want to say that overall, When we hear from the European vendors, such as Capgemini and Atos, and the India vendors, they are experiencing increased interest in outsourcing. They still compete for relatively larger size deals and longer term deals in BPO and ITO and applications outsourcing, or combination multi-tower deals with some consulting and SI in them. But they are still available across Europe. Clients are more open to outsourcing now when compared to a few years ago. And we see increased activities from India vendors competing for deals with European vendors and with multinational vendors in the outsourcing segment in Europe. So that's definitely one driver for this geography. Digital transformation, cybersecurity, those are also opportunities. Work with highly regulated industries such as the public sector, and vendors doing work with clients on data protection requirements due to protection regulations within Europe. So certainly there is opportunities for consulting and SI in this segment, in those sectors, and driving growth for the European geography. From a cloud standpoint, I think there is a major difference between the cloud trends within Europe and North America, and that is one of the reasons maybe why North America is experiencing less growth than Europe. So I heard a few times vendors mentioning that the adoption of cloud in North America is much faster than in Europe. In Europe, clients are still at the initial education, understanding of what cloud is, what are the impacts on their business. So less work that's actually related to adoption and actual use of cloud delivery models by clients in the European geography when compared to the US. So effectively, I think there is some cloud revenue effect that's taking place in the US that's slowing down growth. And at the same time, we haven't seen this cloud acceleration in Europe, which I presume will come very soon. And we'll start seeing some challenges from that cloud adoption side in the European geography as well. We do show more details in our benchmark in terms of geographies, breaking splits between Europe and the United States for the vendors in our IT services vendor benchmark. So this is just a highlight in Europe.
Excellent. And yeah, I mean, that's, yeah, there's so much depth within this benchmark. You probably get the sense that we could talk forever. Ask any one little question and we can go off for quite a while. There's so much in here. Another question has come in, and I'm going to go ahead and read it now. The platform-driven strategy often means significant investment in a product solution for a specific vertical area, and sometimes means moving away from open standards. Do you agree? And if so, how do IT services vendors maintain this balance? Ramunas?
I have to agree entirely, and I think this has been a conflict throughout the years for the IT industry. Customized vendor-specific solutions versus the open environment and what you can obtain on the open environment. It's been going on for a long time. I think it started when Linux came on board, and in fact, and we've seen how that has evolved. And there's many of many of the vendors have developed their own distributions of Linux with certain add-ons to improve the efficiency of that operating system. And the same is true for all the platforms. I think the vendors would love that everybody use their platform. They recognize, however, that sometimes the platforms take what they're doing and only can go so far. So you still need an open entry point. APIs have to exist. Developers will develop to connect your platform to the rest of the world, or the platform that you're using to the rest of the world. If you have the developers developing on your platform, it's an added advantage. So if you make it easy for the development community to work on an open standard across a platform that you support and focus on, that's only to your benefit. And I think the balancing act is going to be, from the customer standpoint, is open delivering me the best solution, or is there a platform that is vendor specific that is a better solution? And at this point, the platforms have not all evolved to the point where you can say this one's the best in breed, everybody else, you might as well forget it. But there are some out there that have been very successful, and those probably will continue to be vendor-specific platforms rather than a wide-open platform situation.
That's yeah, not much more to say there. If whoever asked the question, if there is a follow-up, you want to shoot an email to us, I'm happy to go into more detail, but I think that was pretty comprehensive. We really have time for none more questions, but we'll squeeze one more in here because it came through, and actually it's perfect because it sort of sums up so well how we can't possibly cover this entire benchmark in an hour. Can you talk about Wipro? What are the core strategies and drivers for growth? We could talk about all 30 of these companies at great length. Amy, you know Wipro best. You want to touch on them for a moment?
Yeah, I'll try to make it quick. I know we're running out of time. So Wipro, they have very high aspirations for their digital business, and I think that they've made it clear that that's top of mind right now. What they'd like to do is generate $1 billion in digital revenue annually by 2018, which it's pretty aggressive.
Yeah.
Just believe it.
Yeah.
So its investments definitely reflect this. They've been laying groundwork over the last 24 months or so to diversify revenue streams to try and reach this goal. Their go-to-market really revolves around partnerships with 9 alliances that they announced recently, IP development, and upscaling its workforce. So they announced an additional $200 million investment in emerging technologies in automation, digital, open source, and cognitive computing in 4Q14. We think that that'll pay off in the midterm as intellectual property investments. They produce real-life relevant solutions that are resonating with clients because they have pilot programs going on.
Right.
We think that management and service line shifts definitely demonstrate that they want to improve their services delivery to go along with it. They also want to expand globally. So they've got a lot going on right now. I think that it'll be interesting to see how well they can execute on all of that. We do think that they will achieve like a 10 to 12% year-to-year growth rate in 2015 with an operating margin between 21 and 22%. And I think it'll just depend on their pipeline and how well they're able to execute on all of these things that they've identified.
And that you hit the exact right note there. It's the executing on so many things they've identified. I mean, I hate to throw cold water on them, but the cognitive computing and being able to actually roll that into not only real life productive, desired, and sought-after solutions, but are actually profitable, we'll see. Ramunas is giving me that look like I'm either really right or really wrong. I can't tell which. So we should probably wrap it up, Justin.
Yep, yeah, I think that's all we have time for. So thank you, everybody, and thank you to all our attendees for your questions. You can follow the analysts as well as TBR on Twitter on the slide listed here. And additionally, before you sign off, we'd like to ask you to take a brief survey about today's webinar. Your feedback would be greatly appreciated. We'll leave the chat function open for another few minutes for people to ask last-minute questions. Otherwise, have a great afternoon.